Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you trading involves risk of loss and is not suitable for all investors. First market we're going to cover will be the Australian US dollar. We said last week it's going to be interesting to see how the Aussie handles support down there, particularly in the face of strong US data. Just over a week ago, you had a strong employment number in the U.S. Then this past Thursday, you had a strong retail sales number. You have excellent consumer confidence numbers in the States and the U.S. However, the foreign currencies are holding up pretty good against the greenback Aussie U.S. dollar. A good example of that. I think for now, these currencies, they're just on hold. They're waiting to see what the Fed's going to do, and we think the Fed's going to raise sooner rather than later. We think there's a possibility of a rate hike really at the next meeting. The Fed has what they need. We think if they wait too long, they'll lose credibility. Never make the mistake of thinking that the Fed has no credibility. Never make the mistake of thinking you can fade the Fed, and we're always of that camp for a very good reason, and that would be 30 years of experience in watching them. So we think that they'll raise sooner rather than later. So Aussie, for the meantime, just in limbo. This looks like consolidation to us, probably prior to another test, another crack at that low there, and a potential quick trip down once you penetrate that. Overall, though, from a longer term perspective, however, we'd be much more interested in the longer term uptrend and starting to accumulate this market should it break 75 rather than try to take advantage of what's going to happen short term. Next market, the dollar Swiss. We said after this rally, we said we're definitely interested in buying a dip in this market, and at that point we'll take a look at leverage, using leverage to go long. Also, we feel the same way at that level right there. Now keep in mind, if we like it there, we love it down here. So again, it's similar to the Aussie in that we see this market on hold too, waiting for the Fed, and we think the Fed is going to do what they've said they're going to do all along, and that's raise rates, and that's long-term bullish here. So we definitely like the Swissy just above 92 even. We would look for any kind of short-term shift of momentum higher to jump on board there. Again, if we like it above 92, we love it above 90. Next market, the dollar index. Same story. You can see we have support painted right here, just right around 94.75. I think we mentioned that before, and it dips below it, knocks stops out, jumps back above it. We see that as short-term bullish, but again, it's a market where if you like buying it now, you gotta have enough powder to withstand another dip down and then to buy it again here, just above 93 even. So that's what I mean when I say, hey, if we like it here, we love it down there. You can't just go all in here and with a stop just below there. You need to be able to weather another move deep into that 93 handle if you're going to play this guy from a longer term perspective, from what we see as a safer perspective. Next market, the euro. Euro's been coiled up pretty good. I think it's very telling that you had a great number of retail sales. Consumer confidence is strong again. Home prices are up in the U.S., yet you couldn't crack the euro. What that's telling us is that this market's still consolidating, and it's not quite ready to go off the short side. Nothing wrong with maintaining long-term shorts in here. Same story as everything else. If we like sell signals in here, which we do on a shorter-term, intermediate-term basis, then we're going to love a shot at selling at 115 too. So you got to keep the shorts have to keep their powder dry. You have to be in a position to withstand another rally up into resistance. So market looks to us to be consolidating. The only way to read this thing, the only way to read these currencies after a week of strong U.S. data is that the dollar's just not ready to resume strength again. Now, these are markets that could change in a hurry if the Fed does something that the market doesn't expect, in which case we'll pop up and we'll come on with a video and we'll explain that. But for now, if you're a dollar bull, you got to keep your powder dry, and as a short-term trader, you want to be participating in these counter-trend moves in the euro. Counter-trend moves higher. Okay, next market, gold. There's gold. Gold was funny this week. It's almost like the poor man's stock market. You had a good retail sales number, and what did gold do? Gold jumped short-term. well, then it settled back then. But gold, we like selling rallies in gold. Here you can see it short term, and it knocked its head right on resistance for us there, right at our RTT level, right at that 2/3 level, and they knocked it down from there. So we think gold is really going to be on the short end of the stick here in a rising U.S. interest rate environment. So nothing changes for us in gold. Maintain shorts, sell rallies in gold. Big picture, we think that when gold breaks short-term support in here, it'll be a quick trip to 1100, and then from there, who knows how far it could drop. Successive closes below 1100, and we'd look for something along the lines of this sell-off that we saw in 2013. Hey, last market we'll take a look at will be U.S. interest rates. Nothing's changed here. They're going higher. What we said about a month ago, that probably the surest bet on the board from our perspective was that you would see higher interest rates, and that you're seeing them, gang. Look at, they bottom just below 1.9. They're currently 2 1/3 here. Got almost as high as 2 1/2. So we think that that's the trend in place now. Long term, that's going to be supportive of the U.S. dollar. You just have to be patient though with that trade long term as far as long the dollar. Thank you so much. My name is Jay Norris. I teach trading at Trading University, and we'll see you next week.